welcome to another financial analysis video with myself, Moeed Amin, and Ted Wayman. So today we're going to be looking at another sustainability business. So we're looking at Vestas Wind. And Vestas Wind are a Danish company. And as of 2013, they are the largest supplier and manufacturer of wind turbines in the world. So we're going to go into much more detail about them, especially around their finances. Now, quick note about this show. This show is to help you build your business acumen. And one of the best ways to do that is to help you understand the language of business, which is finances. Not my quotes, those are Warren Buffett's quotes. So who am I to argue with him? So we're going to look at the financial statements of this company, and in doing so, help you and educate you on how you can read, understand, extract any insights from any future financial statements of other companies that you're interested in. And we in this show are analyzing the companies that are famous, right? And most of these are requests actually from our viewers. I'd say about 98% of the companies that we analyze are from requests from our viewers. And in fact, this one is no different. This was a request from one of our viewers, Alex Paul. So Alex, here is your video. Thank you for making the request. Very interesting company to look at. In fact, they were a client of mine quite a few years ago when I was working with R&D advisors. So very interesting to see their finances again. Quick note on the analysis that we're going to be looking at and some information about Vestas Wind. So they were founded in 1945. And like I said, they're the largest wind turbine manufacturer and seller in the world. What was interesting is in October, they saw a very large increase in short interests with their shares. Now, we're not going to go into that in detail, but for those that do not know what shorts are, essentially these are options trading where someone will make a bet on a share of a company, and they will say, look, in a few months' time or in a year's time, whatever the time period, I bet that the shares of this company is going to drop, and they will buy options for those shares in the hope that if it drops, then they make money from that. So essentially, it looks like there are some people in the marketplace that are expecting these shares to drop in the future. Now, we're going to look at the financial statement to see if there are any clues behind that. Bear in mind, we only look at annual financial statements, so they tend to be retrospective. They are not forward-looking, as shares are. If you want to look at any recent financial statements that will give a better indication of why that's happening, have a look at the quarterly statements. Of course, these videos are going to help you analyze those quarterly statements faster and with more confidence. The share price, and we're going to go into the share price of Vestas later on in the video, so stick around towards the end because we're going to look at that and look at that in context with the financial statement that we've analyzed. But if you invested when they floated, you'd be sitting on a profit or an increase of about 513% of your investment, which is not bad. If you invested 5 years ago, you'd be sitting on an increase of 43%. And if you invested a year ago, wouldn't have been the best timing necessarily because you would be sitting on a drop of 46%. So like I said, we're going to go into that in further detail later on in context with the financial analysis. So let's share that now because they're also making a very big push into Asia. They're trying to get ahead against of any Chinese competitors, so they're making pushes into Korea and Japan, etc. So Ted, let's share with our viewers how they can read the financial statements of a company like Vestas and any other green-related businesses.
Absolutely. So good to see you, Moeed, and welcome back to all of our subscribers. Welcome to anybody who is new and hasn't seen these videos before. Please do remember to subscribe, and if you like what you see, then do click the like button and also share with your network, your community, your colleagues, your friends who might also benefit from these videos. Do leave any comments in the comments box. So if you've got any comments, we don't always get it right. We don't know. I don't know this business particularly well. I don't know the industry particularly well. So if I've got something wrong, then please do let me know. obviously do be polite. And if you'd like to like us to look at a company, then leave a comment in the comments box and tell us why you want us to look at it. So here we are. The annual report and accounts 2021 is available on their website. You will find lots of pretty pictures in there telling you who they are, what they do, what their strategy is, who's on the board of directors, their expertise, their corporate governance, how much the board gets paid, how they manage risks, etc., etc., etc. So lots and lots of information about the business, but we are going to whiz through, as Moeed mentioned, and go straight through to the numbers. So here we have the numbers. I'm just going to zoom in so we can see the numbers in a little bit more detail, make it a little bit bigger. Here we go. So zoom out a bit. There we go. Right, so we are in millions of euros. So revenue 2021 is 16 nearly sort of 15.6 thousand million, which is about 15.6 billion euros. So there is their revenue, up 5% on the previous year, so they are growing. Production costs, so the cost of producing all those wind turbines are quite expensive, 14 billion. So that's about 90%. So if they sell a wind turbine for 100 euros, and I'm guessing they probably sell them for a lot more than that, but if they sell a wind turbine for 100 euros, it costs them 90 euros to make it, and they get to keep 10 cents in the euro. 10 cents in the dollar, so to speak. R&D costs, distribution costs, administration costs, 64, 67, 68, leaving them with an operating profit of 461. They then got this special item. We can have a look at the kind of the notes if we want to see what these special items are. We tend to find that, you know, they're usually kind of billed as one-off, but they happen on a pretty consistent basis, you'll notice. So really, let's look at this 322 as essentially the operating profit. So their operating profit is about 3%. So they're not very profitable. They have some debt, and as they have some debt, they're paying interest, and we just double check the interest against the operating profit, and we notice that, you know, well, they can afford their debt. There's not a lot of headroom. You know, if you're turning over 15.6 billion and you're making an operating profit of 322 million, which is about 3%, and your interests are 122 million, what you don't really want is for interest rates to start going up. Of course, that's exactly what they are doing at the moment. So perhaps there's a little bit of a warning signal that these guys maybe start to struggle with some of their debt. They pay some tax, and then they get the profit after tax. So 176 million on 15.6 billion turnover. It's about 1%. They're pretty much operating at break even. Previous year, at least they were at 5%. Still pretty low margin business though. So they kind of, and this looks like the big one here. This cost of production, is very, very high compared with what they're actually selling. So there's the income statement. We'll go on and have a look at the balance sheet. Now, quite interesting for these guys. So, as a wind turbine manufacturer, I was very interested to see that their biggest in their non-current assets. You remember non-current assets, that's all these things. This is what you need to run the business. Now, I'd expect them to have a lot of property, plant, and equipment. They're going to have the manufacturing equipment to make wind turbines. I wasn't expecting to see quite so much in terms of the intangibles. Now, my gut feel is that that's going to be goodwill, that these guys have grown through acquisition of other companies. We can check that out by having a look at note 3.1. And here is note 3.1, and you notice, yep, so the biggest one is goodwill. So goodwill arises on acquisition of a business. It just tells me that they have been buying other companies. They've got some software. Okay, I expect that. 140 million. You have to kind of think about it. They got some other, they don't classify what they are, 437, and then they've got these completed development projects, and I'm trying to work out why you would have a completed development project as an intangible asset. Surely it would be a tangible asset if it actually been created. So I was a little bit confused by that. I wasn't sure exactly what that kind of what that relates to. So anyway, maybe somebody else is watching this and can provide a little bit of light on that. So returning back to our balance sheet, we continue on looking through the information, and if you remember, so our non-current assets is 6.8 billion, up a little bit from the previous year, and then the current assets 12.9 billion. So biggest number there, inventory. So inventory will be effectively the kind of, all of the wind turbines, the raw materials, the work in progress, and the finished goods. Now I'm guessing these guys will be making to order. I can't see them really kind of making wind turbines and then sticking them in a shop window and waiting for somebody to walk past and go, I know, I'll buy a wind turbine. So I would assume that these inventories are kind of they're only going into production once they've got the order book kind of signed, and therefore they're pretty confident that they'll be able to turn those into cash. Trade receivables, so people who owe them money, their customers, and some contract assets, and I think that I'm not sure exactly what those contract assets are. Again, note 2.3 will give us a bit. I do know that they are using some finance to finance the business, and some of that will be in the trade other receivables as well, where they effectively use invoice discounting and get the banks to pay them. And they've got 2.4 billion in cash. Okay, so they do have a reasonable amount of cash sitting on the balance sheet. So current assets look okay. Current liabilities, you'll notice the current liabilities 12.7. Again, we can just quickly check that against our current assets. Liquidity ratio, basically pretty much on, bang on one. So it looks like that they are liquid. In terms of their current liabilities, so they've got some contract liabilities. I think we can match the contract liabilities to the contract assets. So these contract liabilities will be sort of work in progress on the kind of the development of whatever fields that they're building. Trade payables will be their suppliers. They've got a little bit of debt, the financial debt, so some current and some non-current. Not a huge amount, 1.4 billion, and that's why they're paying the interest, if you remember, we saw in the income statement. And I think that's really it. And then the sort of the difference is the equity here. Here's the equity, and they're funded through retained earnings. Now, quite interesting, this retained earnings. So let's just have a quick look at that. We can see that through the movement in equity. Here's the movement in equity. So what we're looking at here is this the current year. Here's the retained earnings column. There's the profit for the year, and they're paying out dividends. So I thought it's quite interesting that they feel comfortable to be able to pay out dividends. Now, what is interesting is that if we look at that on the previous year, in the previous year, they also made a profit. They also paid out a dividend, but we see this number here. I couldn't quite work this one out. It really foxed me. So this is a transaction with owners 860. Okay, and it says it's a capital increase. So it's just slightly bizarre that these guys, they've got they're raising capital and paying dividends. I couldn't quite work out what was going on there, and I wanted to have a look at that number in the cash flow. So theoretically, if you're raising capital, we'll be able to see that number in the cash flow statement as cash coming in through their financing activities. So with that in mind, let's go and have a look at the cash flow statement. Here it is. And the cash flow statement, interestingly enough, so here's the profit from operating activities. So they are generating cash. There we go. So they're generating about $1 billion in cash. They've got some financing activities. Again, there's a kind of this expenditure on intangible assets as well as tangible assets. They talk about this thing called free cash flow. A lot of people don't necessarily kind of explicitly state their free cash flow. So this is the difference between, in effect, the cash and the cash in and the cash out on investing. So buying subsidiaries, buying shares in joint ventures, et cetera, et cetera. So there seems to be quite a lot of buying shares in joint ventures as well as this kind of the actual capex going on that we were just looking at. And then the last bit down here is the financing, and we notice that there's a little bit of debt. So this is kind of refinancing of debt. They are paying out dividends both years. They're paying out dividends, and you'll notice we can't see any of that 860, and I couldn't work out what was going on here. So I think what's happening is I then went back to these numbers here. Now, this was quite interesting. So these numbers here talk about adjustments for non-cash transactions. And we suddenly think, well, what do you mean by non-cash transactions? Well, one of those will obviously be depreciation, i.e. the profit is after deducting depreciation, but the cash profit ignores depreciation, and therefore we add back depreciation, which is a non-cash expense effectively. So I was quite interested with that 6.5, note 6.5. So I thought we're going to have a quick look at it. So here is note 6.5, these non-cash transactions, and true to form, as we'd expect, there is the depreciation and amortization. And then we also see things like this kind of this gain on disposal of joint venture. So I'm guessing, and this is purely guess, I think that 860 is all down to some gain on it's a gain on a disposal of a joint venture, which is how they've managed to kind of book it through as their retained profit. So I couldn't quite add everything up together. So I wasn't absolutely convinced by this. But you can start to see that these guys, they are they are generating cash, but I'm just a little bit nervous about this the kind of the nature of that cash generation, I guess. And this slightly sort of brought me on to looking at their quarterly. Now, as you said, Mo, we don't tend to look at the quarterly reports, but I thought we'd just have a quick look at it anyway. So here's their latest half year. And what I thought was quite interesting here. So for the profit, and let me just so we can see, for example, that half one of 2022 they're making a loss compared with a profit this time last year. They're making a loss for quarter two compared with a profit in the previous year. So we're starting to suddenly see, are we seeing the wheels coming? Are we starting to see a little bit of wobbling going on? Suddenly we've got more of these special items popping in, just not quite sure exactly what those special items are. And if we look at the cash flow, we just whiz quickly down to the cash flow, which is fairly important. This cash from operating activities, we see in 2022, they've lost 1.1 billion in cash compared with the first half of 2021. Now you'll notice, first half of 2021, they lost cash, but overall they actually generated cash. So half one 2022, they're losing cash. They're losing cash in the quarter as well. It looks like something's changed, and I don't know what has changed, and maybe one of our viewers might give a little bit more information on if they know what's going on. But it looks to me like something's happened, and these guys are they're now actually burning cash, and if they're burning cash, then they need to be quite careful. So if you burn through, for example, if you burn through 1.1 billion of cash in the first half of 2022, and you have in your bank balance, and we'll just find our bank balance, here it is, and you've got about 1.6 in your bank, sorry, this number here, 1.3 in your bank, then effectively what we're saying here is that you can survive for the rest of the year, and then that's it, it's game over. Inventories are up again. I'm guessing that's the order book. So it looks to me like cash and cash flow is a bit of a concern for these guys. So with that in mind, look at the share price performance. It's just to notice that we were dealing in euros on their accounts, and their shares are quoted in Danish krona. So 150 billion Danish krona is, by my calculation, about 20 billion euros. but 20 billion euros, they're still at about 115 times earnings. And, you know, and that's based on obviously on 2021 results. So, you know, still high, you know, high in terms of earnings. Inherent goodwill, you know, it's a 5 billion balance sheet on a 20 billion market cap. That's about 15 billion of inherent goodwill. So I'm not 100% convinced by these guys. Looking at their working capital, you know, my estimate, and this is very back of an envelope calculations, I reckon it takes them about 143 days to actually you know, make the wind turbines and turn them in and actually sell them. Their stock turnover is 143 days. 36 days to get the money in from their customers. Accounts payable 100 days. Looks to me like, you know, they're kind of maybe pushing back on their suppliers. If you are supplying to these guys, you're probably having quite interesting conversations, and that still leaves them with a working capital requirement of 80 days, which is still quite a lot, and I think that is straining their cash flow. So it looks to me like, you know, perhaps that's this kind of this downward pressure down here. You know, is, you know, have they hit fair value? Quite possibly. Is it, you know, is it still a kind of, you know, a long run? This is what your chartists tend to do, and kind of, you know, look for trading patterns, you know, kind of bouncing out through what we call head and shoulders, etc., etc. So, you know, is it now ready to bounce and come back, or is there going to be continued downward pressure? I don't know, but I think that, you know, these guys, you know, they need to up their margin, they need to generate their cash flow, and I think there are probably a few headwinds for them, which maybe if you're a wind turbine manufacturer isn't such a bad thing, technically speaking. Anyway, so there you go, Moeed. There's my take on Vestas, and as I said, you know, be very interested if any of our viewers have any particular insight or would like to share their knowledge or understanding of the business.
Great, thank you, Ted. And there you have it. So if, like Ted said, is if anyone's familiar with the industry and can share some more information around some of those numbers that we couldn't quite work out, then do leave a note in the comment section. This is an education show at the end of the day, so we're all learning from each other. So there you have it. You know, slim margins, cash looks to be potentially an issue. It'll be interesting to see what happens in what they post for Q3 and Q4 of this year, and see if there are some trends that we can identify. So until the next video, the next company that we analyze, thank you, everyone. Thank you, Ted. We'll see you in the next one.
Catch you later, Moeed.